Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So equity, bond, and oil market volatility continues to be elevated as the Iran conflict continues. Fed expectations continue to shift from cuts just a few months ago to now a potential rate hike before the end of the year. And finally, bond market risk is elevated at its highest level since the April tariff turmoil that the markets experienced back in March and April of 2025. Now, the Iran conflict remains the most important headline, and we're seeing markets react to every sort of situation in terms of headlines or the changes in the conflict. Oil prices remain elevated above $100 per barrel. The S&P 500 has pulled back to around the 6,500 level. Relatively muted reaction so far, but volatility has certainly picked up for the stock market overall, despite the fact that President Trump on Thursday announced a 10-day pause. Remember, this is an extension from the previous 5-day pause. The markets have not received the clarity they would like on how much longer this conflict is going to continue. There are reports that troops are still moving toward the Strait of Hormuz on the American side as these negotiations continue. There have also been a lot of mixed messages from both the Iranians and the U.S. in terms of how the negotiation is going, and in fact, what negotiation is actually happening in the first place. So there's a lot we don't know, and because of that, the equity markets have been in a stalemate, but mostly drifting toward the downside because of the uncertainty and the spike in oil prices. The other big thing weighing on both bond markets and equity markets is the fact that Fed expectations have shifted significantly. On the chart here, we have two different periods. In the dark blue is the Fed fund futures probability for the December 26th. Remember, this is the last Fed meeting of the calendar year 2026. So these were the expectations for where the Fed funds rate was going to be at the end of this year back on February 27th. Remember, that was the Friday right before U.S. attacked Iran. And you can see with the current Fed funds rate at 3.5 to 3.75% range, the market was expecting at least 1 to 2 cuts, with some even saying we might get a third cut. Today, the odds have shifted significantly to the upside. 54% are expecting the Fed to pause, with a nearly 50% probability the Fed could actually hike at least once during the year. In fact, Fed Governor Lisa Cook came out and actually said the Fed's dual mandate of price stability from inflation and the jobs market has actually firmly moved to inflation being the biggest risk right now. And that's also what market participants are also believing as well. So there is now shifted to a potential Fed rate hike this year. Remember, this is really volatile. This could move a lot, but this is why we're seeing interest rates move significantly higher across the curve. And remember, higher interest rates is moving bond prices lower. So we're seeing equity and fixed income move lower during the past few weeks. Now, speaking of equity moving lower and bonds moving lower, we're seeing volatility in the bond market increase for all the reasons that we talked about. The MOVE index is basically like the VIX of the bond market. It's looking at expected volatility in the interest rate and bond market, and it is high. In fact, it's the highest level since April of 2025, and we typically see these spikes, not always, but typically when interest rates are shooting higher. This tells us there's a lot of uncertainty around what the future interest rate path is going to be for the Fed throughout this year. It also is telling us that there's a lot of risk in the bond market. This is important because obviously bond returns and bond volatility is heightened right now, but equity markets tend to be correlated to this higher risk MOVE index as well, just as much, if not more, than the VIX index itself. So overall market risk is really elevated for risky assets and bonds right now. I want to thank everyone for watching, but I also want to share some interesting, encouraging, some scary, some unique news around the advancements of technology. Everybody's talking about AI, but take a look at what happened in London. Doctors actually remotely guided a surgery on a patient at London Clinic to help a cancer patient from over 1,500 miles away. So this is a unique, interesting story about the technology advancements and doing remote surgeries with robotic arms A really cool advancement in that technology. It will be interesting to see how that evolves over time, to be able to help different people access surgeries from expertise from miles away. I thought that was really interesting and wanted to share it with the listeners here. With that, I want to thank everyone for watching, and I'll see you next time.